Hello guys and welcome back to the channel. Now I finally got a day off where I can make a video or two, because it's really hard to actually find the time to set aside to create these for you. Now without further ado, it's going to be a quick brief on just a couple of stories along with gold and silver and various currencies and things like that. Let's get straight into it. Now, this first is an article from Zero Hedge. On the 13th of August, German president booed, attacked, claims, quote, "the people are the problem, not the elites," end quote. Revolution is closer than you think, following Angela Merkel's earlier calls for German CEOs to hire refugees. And as Martin Armstrong notes, Germany has raided its healthcare funds to support the refugee crisis. The government passed a law that allows them to take 1.5 billion euros from the liquidity reserve of the Public Healthcare Fund, which is a 10 billion euro total paid by members and additionally by the taxpayer, and to give that money to the refugees, asylum seekers. It goes on to say, as Vox Day noted approximately, Germany's elite is going to get a well-deserved one soon, as German President Joachim Gauck was booed and attacked in the streets of Sebnitz, Saxony, after he blurted out the following unbelievable statement, and I'll quote again, "The elites are not the problem. The people are the problem," end quote. The larger point is that this is something we are seeing all over, the top detaching itself from the bottom, feeling little loyalty to it or affiliation with it. It is a theme I see working its way throughout the West power centres. At its heart, it is not only a detachment from, but a lack of interest in the lives of your countrymen, and those who are not at the table and who understand that they've been abandoned by their leaders, selfishness and mad virtue signalling. So that's just the key points I wanted to read out of that article. Now moving on to the next article, again by Zero Hedge. Again on the 13th of August. A stunning admission from Deutsche Bank why a shock is needed to collapse the market and force a real panic. In what may be some of the best and most lucid writings on everyone's favourite topic, namely, quote, "what happens next," end quote, in the evolution of the financial system, Deutsche Bank's Dominic Konstam takes a look at the current dead-end monetary situation and concludes that in order for the financial system to transition from the current state of financial repression, which has made a mockery of all asset values due to central bank intervention, to a semi-credible system driven by fiscal stimulus, there will have to be a crash, one which jolts policymakers out of their stupor that all is well simply because stocks are at all-time highs. And since a legitimate fiscal stimulus is what is needed to reignite the economy, US and global GDP will continue declining even as stocks keep rising to new all-time highs, not on fundamentals, which are all pointing in the opposite direction, but due to the even more central bank intervention and financial repression. Thus, a catch-22, which ultimately, according to DB, Deutsche Bank, ends in the only possible way, with a market crash. It goes on to say, this is critical and inevitable, as only a shock can lead to an, quote, unwind of the falling yield, rising equity market where all financial assets trade badly, end quote. And while Konstam's line of reasoning is absolutely correct, we doubt just how his employer would look upon a market plunge that wipes out 30%, 40%, or even 50% of global equity values. Would Deutsche Bank even survive such a crash? As such, we doubt that these strategies, analysis and forecast, correct as it may be, will be endorsed by his employer, even if by now it is clear to all that only a major crash, i.e. a global reset, can kickstart the world out of its zombie-like, centrally planned existence into the long overdue phase of whatever it is that comes next. And I'm pretty sure all you guys know that a 30% plunge is more than enough to destroy the Deutsche Bank system. I think you could find that even a 1 or 2% drop would be more than enough to destroy it. So another Zero Hedge is billionaire Crispin Oddy, who's had a pretty terrible year, is betting everything on gold. Now this goes on with another billionaire being linked to the word gold. You've obviously had George Soros not too long ago turning in a huge stake into Barrett Gold, I believe it was, among many others. Now, this is obviously just a drip feed of information of huge money changing from the big corporate investment structure and diverting capital into the only real form of money, gold and silver. Now, I won't go any further into that story. You can find that on the Zero Hedge if you want to read into it, but it comes up with this little graph inside. I'm sorry about the image being extremely bad, but that's the best I could take from the article. Now, the left side is the increase in M2 monetary creation of the Eurozone, the US, the Japan, the UK, and the China system. And you can just see the increase, which is actually kind of on par with a lot of the housing markets and stock markets. Now, on the right hand side, again, you have the global M2 against the gold price. Now, you can see in 2011 you had the peak in the gold price. Now, you can see the blue line, which is the continuation of money creation, which has never stopped increasing. However, during obviously 2011 and 12, that's when they started suppressing the gold market and silver, being on a decline and a suppression, as we all know, for the past 5 years. All the while, monetary creation has continued at a rapid pace and will only continue at an even more rapid pace. Now, you should be able to see a correlation between the two lines, minus obviously artificial interference. So you can see how much of a gain should be theoretically created when a monetary system collapses, because all that money will then be revalued into some other form of asset. And obviously, the age-old asset would be gold. Now, in an easy mirror matching curve, gold would be easily twice the price of what it is today if it was to coincide with the creation of money. So it just tells you that it's a fantastic buy now, because infinite money creation is not sustainable. Debt creation is not sustainable. Okay, so I'm going to leave it there just for the couple of stories. Now I'm going to go straight into what's happened in the gold and silver market this week. So this will be the market update. So I'm going to start obviously in UK pounds. Now, gold has obviously risen this week, starting at 1,022, finishing at 1,034. It's had a couple of good rallies during the week, and what was quite amusing was at the end of the week, Friday evening, during the switchover from the LBMA to the New York Exchange, all of the week's gains got taken out, and that was actually representative of both gold and silver. Silver had a good rally during the beginning of the week, gaining quite good numbers. And then had a slam of 2% right at the close on Friday. I'm going to leave this as a really brief sum up, because it's just the same old thing every single week. However, we are on an increase gain, and you can just see that by the charts. So it is becoming extremely difficult for the manipulation to continue, with the added pressure of having to deliver on all the paper ETF trades that they've got going on. Now, what is quite interesting, if you look at the all-time highs that gold had back in 2011, it was up at 1,132. So we are less than £100 off the all-time high, spot price that is. So yeah, it's about £98 short of the all-time high. Now, as we know, silver lags gold's movements. However, it has been accelerating at a faster pace compared to gold over these last couple of months. And you can see we are still nowhere near the all-time highs. They're in the UK pound as 28.18. So we are almost plus minus still 100% below that level. Whereas gold is extremely close to that level. So from saying that, there's lots of predictions out there at the moment that silver is going to accelerate imminently. Now, whether this happens is anybody's guess, but knowing that over history, the two metals follow each other almost identically, with silver accelerating past the gains that gold has, but just on a delayed basis. Saying that, I'd anticipate it again to still continue moving higher than from where it is today. So with the market move on hitting it back down, I decided the only thing you can do in a situation like that is buy. And buy I did. So I've added to my position, even though technically people will say, well, you're at the market high. It's at its market high. But bear in mind, it's coming out of a severe bear market. And most people don't even know about this just yet. And that is why you have all this extra gain to get, and it will even surpass that. It's just a matter of how long that is going to take. The monetary system will fail, and the revaluation of this severely suppressed real money will reflect the revaluation process. Now, there's obviously talks going on, and I forget who posted it, but apparently there is some form of deal being set up with the IMF where the yuan is being added into the SDR basket. I think it was either October or November time this year. And there's speculations that gold will be used in whatever will be coming next, and that agreements are being made upon setting it at 5,000 US dollar per ounce as a base level, and then the currencies in the basket will be linked to that gold backing, supporting the stability of each currency inside that basket, thus protecting their fiat system, because it will then be backed by gold. Now, that revaluation of gold, if it is to happen, is going to be huge, but it's going to be even huger for silver, because that is just going to take off, because that is the people's money right there. Silver is the people's money. Gold is for the big banking institutions to settle national debts and things like that. So moving on to the US dollar, again, the silver took exactly the same losses. It's right back to its previous week's price after the nice little rally midweek. But obviously people did not want this rally to continue, so they hit it hard. And I'm sure there's going to be quite a bit of buying this weekend. And I'd expect the markets to open up again next week and regain its 2% loss that was slammed out Friday evening, UK time. Gold against the US dollar. But what's interesting is this is showing the equivalent of where the gold is now on a US dollar term is still heavily controlled by the strength of the US dollar, because it's not even past halfway of its all-time high marker on this 5-year chart. As I've said in previous videos, the US dollar charts are always going to be the last to break, because at the moment the US dollar is the backbone. It's got the petrodollar link, and everything has to be perceived as powerful in dollar terms. So if gold is rallying to all-time highs, it means the US dollar is weakening, and that doesn't look good for strategical strangle of the global markets and nations that they flood their dollars into. I'll leave the market wrap up exactly there, because I just think it's a buying opportunity. So that's basically it. When you see the markets getting hit, just go in and put another purchase down. These guys cannot continue what it is that they're doing to these markets for much longer, whether it be a year or two. It can't really go much further than that. This October, this November is going to be a huge impact on global markets, and I'd anticipate that these prices that we see today are going to be up by another 40-50% by October time. So now is a fantastic time to convert your worthless fiat money into some tangible form of asset. Now, if you're from the UK, here's a couple of good places you can buy from. Now, this is called Silver to Go. It's a company in Germany, and they can supply fairly cheap metals to anybody in Europe at generally much cheaper prices due to the VAT that they don't have to pay. And while the UK is still part of the EU, we still get these fantastic opportunities to buy from them. For anybody that hasn't purchased before, or who are not aware of these companies and purchase from other places in the UK, this company is extremely easy to buy from, and the postage is generally very quick and efficient. They have a whole list of coins you can get, and the ones that I recommend getting if you're from the UK are the 1 ounce Britannias, simply because with current law at the moment, they come with capital gains tax free. So when you come to sell in the future, you should be exempt from any gains, which is a nice thing to have. Now, these coins are obviously a bit more expensive than the other ones, but then if you take it into account that when you come to sell, these are capital gains tax free, whereas the other ones aren't. So subject to how you sell or trade on the other side of this scenario, I'd recommend just paying a little bit extra now and getting these ones. Now, they do obviously do discounts upon size of order. So if you know a few guys that you all want to chip in together, you can get them a little bit cheaper. It gives you the approximate delivery time. Now, I've found it's normally about a 3-day after order, as in once they give you an email receipt of confirmed payment, you'll usually have it within about 3 days. Now, regarding payment, it's extremely easy. Just a standard bank transfer. They've got a bank in the UK, so you don't have to worry about exchanging things into euros and paying an exchange rate or anything like that. You just pay in UK pounds to a UK bank account via a wired transfer from your online banking or whatever, and it's done. Input your reference code that they give you, and it's done. It's extremely simple. Now, here's another one which I've purchased a very small amount from, right at the beginning of finding out about this situation we find ourselves in on Awakening. And these guys are actually quite expensive when you compare it to finding out about someone like Silver to Go. Now, I'll give you an example. If you put in, say, 25 ounces to Silver to Go, it's going to cost you £477, plus they're going to put on about £12 postage, so you're looking at £500 for 25 ounces, but that's delivered. Okay, now if you're going over to this company which is based in the UK, let's click on this one and stick the same amount in, 25. You're looking at 560, so you're paying over 10% more to get the same amount of silver. And that is why it's better to buy from the European precious metals people. Now, I had a comment come in from one of the subscribers, and he actually just told me that you can call up these guys and you can request to buy bars, silver bars from them, and possibly coins. I'm not sure because I haven't actually called them up. But when people sell precious metals back to these companies, if you're in the UK, you have to pay VAT on that silver. Now, because you're buying a second-hand item, the VAT has already been paid on it. So he's told me that the VAT is taken off the bar second time they sell it out. So theoretically, this could be an even cheaper place to buy. Now, obviously, you'll have to give them a call and find out about those sort of details. But again, I just wanted to give you two different places with how you can go about converting some fiat currency into some real physical, tangible asset, which is going to hold generational wealth for you and your family. Now, here's a bar chart from this year. Now, it's not going to be fully to date, as in August, but it gives you a real good indication of how different items are performing against each other during 2016. So we can see right at the top, and you can zoom in or you can pause this and you can look at it in detail if you like. I'm just going to quickly say that silver is up 47.95%. Now, this varies obviously upon currency to currency, but basic ratios are showing that silver is outperforming a hell of a lot of stuff. Now, what I wanted just to point out was what's at the bottom of this chart. And one of the items is the British pound, down 10.33%, and it's actually on a continued slide. It's becoming less and less as the weeks go by. But food is becoming an extremely unprofitable thing to do. You're looking at feeder cattle, corn, oats, wheat, hard red wheat, rough rice. And I was thinking to myself, like, who are the people losing out in these sort of these sort of deals, these sort of trades. And I'm thinking it's going to be the farmers and the people working the land and producing a lot of the food. And this is going to have a real impact on labour rate forces in third world countries that are producing huge amounts of these foods for almost nothing in our monetary terms. When I can tell you, you'll have people working in rice fields for like $1 a day. Their rates are then going to be cut because the farmers and the people that own the land aren't going to be making as much money, so they have to reduce the overhead cost in order to continue the sustaining loss. So people are going to be literally dying over these prices and decreasing prices, when effectively the whole world relies on these forms of food to create bread, rice, many of which are the stable diets for millions and millions of people globally. Yet their prices are being slammed down. I'm wondering if that's part of an agenda to introduce part of these GMO crops into these poor third world countries that create a lot of these products, because they will be forced into these so-called high yield crop, which will help the farmers to sell more yield and to gain higher income to make up for the loss of prices, all in a ploy to force feed effectively millions of people GMO crops. And if you've done any research and seen any videos into this GMO situation, how these seeds aren't actually able to replicate and they have to go back to the seed companies to buy new seeds each year. I can just see this being a complete disaster for the farmers and creating huge issues later on down the line. I'll let your imaginations continue on that one, but I'll leave it just there because I don't really want to cover that aspect in the market update. However, silver, check it out. Anyway, these gains are nothing in what is to come, guys, so please do continue to watch my videos for updates, and please do comment, subscribe if you haven't, and do like this video and share it with anybody who you think might find useful information in it. I'll see you guys on the next video. Thanks a lot for watching.